Hello and welcome to the Crypto Insider interview. I am Vlad, and today my guest is Patrick Miller, who is from Portland, Oregon, and he does Bitcoin meetups. He writes blog posts related to Bitcoin, and he has been in the space since 2013 and has some very interesting insights to tell about his experiences with Bitcoin. So, hello, Patrick.
Hello, Vlad.
What is it like? You find yourself being in the space for more than 5 years, and we like to say that in Bitcoin, 1 year is the equivalent of 10 years in real life. And
hmm
what kind of changes have you noticed along the years?
Um, I think there's just a lot more information about Bitcoin now than there was back then. Getting into Bitcoin in those days, honestly, even up until I'd say 2017, was actually to me there was challenging. The amount of public information and publicly available resources from Bitcoiners specifically. Um, was difficult. Even then, there were so many altcoins back then too that uh, coming into the space in that time, I think 2013. I actually think the people that came before that had a better sense of they got to see the initial altcoins sort of like spawning. I sort of showed up right around 2013, and it really took off at that bull market. And after that bull market, um, so the biggest difference I would say between now and then is today there's just a ton more resources specifically about Bitcoin and a lot less. I guess there's still a lot of confusion around like what altcoins and blockchain are, but primarily the difference that I would say today is that you can learn a lot more about Bitcoin today. There's a lot more resources on Twitter and YouTube. Of course, it's easy to get sidetracked in the wrong direction if you get confused by somebody.
Yeah, I guess it's easy to get confused by people who have forked the main Bitcoin blockchain and they call themselves the real Bitcoin, whether it's Bitcoin Cash or Satoshi's Vision. And I see a lot of people who are convinced that they are following the exact same path as if they started in 2009 and followed Satoshi's posts on Bitcoin Talk. And yeah, I guess somehow it's our responsibility to educate them, but there is only so much that we can do. And up to some point, it's actually their own personal choice to follow that path, or maybe they are very invested financially into those altcoins, which pose to be the real Bitcoin.
Yeah, I think you have the people who are probably heavily invested, and they may be the hardest ones to shake out. But I think that newcomers who come into the space actually kind of laugh sometimes to think that I actually don't mind if people get into altcoins early on or get sidetracked early on because I believe that it just takes time, and eventually those people will come around and they will realize that it doesn't make sense to have a bunch of different altcoins with all using the same branding, um, you know, uh, confusing people out in the wild. That doesn't do anybody any good. Um, and so I just think that, you know, in many ways, I am kind of blunt with people because I don't really have time to sit there and explain everything to them. I'm willing to, but usually I just want to try to get, plant some seeds for the future. So maybe in the future they will understand what I was talking about when I first mentioned that, you know.
Yeah, but it's always difficult as we are all grown adults and supposedly we are all able to make our own decisions. And they like to say sometimes that the fact that these projects, which are Bitcoin forks, exist is due to the fact that we are under a very free market, which is driven by the financial decisions mostly. And
hmm
at the end of the day, it's going to be the most successful chain that will succeed. That doesn't make sense. The most successful will succeed. The most prosperous and the one which has the most developers and has the most investments, because money, I guess, also matters in this field. But
hmm
we will see a victor at the end of the day, as I don't see any purpose in pursuing big scaling through big blocks with two projects. and we also have altcoins which pretty much do the same.
Yeah.
So
Yeah.
I
Altcoins
guess
already do that. Altcoins have been doing that since 2011 or 12. They've already had all those features. People don't use them. They use them for speculating, but that's all they use them for.
what is your stance in relation to the gospel of Satoshi? As a lot of people seem to take his posts and words as something that we should pursue continuously, while others just say that it's all about the intentions. And since this is a cypherpunk invention, we should pursue to give it more privacy and more fungibility and make the transactions occupy less space in the blocks and make sure that the blockchain synchronizes faster and stuff like this. While others just say, no, we should just increase the blocks and keep the technology that we already have and not change much because that's what Satoshi intended.
So Satoshi is probably not a single person. It's probably a combination of people. It's probably a couple coders, probably someone who was working on writing the white paper, and maybe someone else who handled like social media accounts or something. That's likely, to me, in my opinion, that it wasn't a single individual. So it's possible that the what we think of Satoshi as is actually a collection of people that have their own ideas about what Bitcoin should be themselves. Um, and white papers are not code. So if just because something was written in a white paper and got published doesn't mean that is the final version, and that's not the actual code implementation. So in this case, we actually know, as a matter of fact, that there's a number of errors in the Bitcoin white paper, and that's been documented by I think is it Andrew Harding? I'm blanking on his first name right now. David Harding has documented about, I think there's about 10 or 11 errors in the Bitcoin white paper. It's called Bitcoin Innerrata, and that's, if you just read that document, you'll understand that the white paper really should have been revised, but it's not a centralized project, so it can't be revised. So that's all we have is the initial white paper, but that is not necessarily what Bitcoin must be. Um, it's possible to scale. I mean, you can quote scale something by centralizing it quite well. So yes, that's possible to do, but it changes the game theory. It changes the network dynamics between the parties. So it would basically reduce resiliency significantly, because the only people who could run nodes on a large block system would be people with significant amount of resources. And if that centralizes and it's just miners running nodes, for example, then you have no sovereignty as an individual. You cannot run the blockchain yourself. The keys you hold are keys to something that can change and be changed by a centralized group of people who can collude together. So it's actually not rocket science. I'm not sure why that side doesn't understand the risks that are posed by such theories.
Yeah, this is a discussion which I had with Udi Wertheimer yesterday, I think. And I told him that when the internet was created as we know it right now, in the form of the World Wide Web by Tim Berners-Lee at the CERN in Switzerland, he intended that everybody becomes sovereign over their own data and runs a server to store all the information and put it online. So the exchange is fair and only determined by what you can store in your own house or in your laboratory or wherever you decide to connect to the internet. But as time went by, and in order to allow the internet to scale, we have given up on this kind of sovereignty, and we said, how about we allow this big company to have big rooms filled with servers, and that's how we store our information, and we don't have to own anything except for one small device that we use to connect to the internet, and that's it. But in the case of Bitcoin, we haven't made that compromise yet, and I'm happy that we didn't get to that point where we said, And I know that there was a lot of pressure, even in 2010, I think, from Jeff Garzik, who tried to increase the block size at the time. And they wanted Bitcoin to become some kind of tool to scale up to the level of Visa and
Hmm.
become something that merchants use. But throughout time, we had smart people who realized that there is a lot of value in transactions that cannot be censored, and in financial sovereignty, and helping people who are under oppressive regimes hold their assets in a kind of currency that cannot be confiscated by the governments and can help them cross the border and get to a country that maybe will work much better for their interests. And it's insane to me that we still have the block size debate, in the sense that Roger Ver acts as a kind of ideologue, or what do you call him? The demagogue who tells you that no, the Bitcoin Cash way is the one of freedom. And I think he posted today that those invested in BTC are only interested in dumping their own bags and only want to look at the price pump, something like that, which is insane.
Yeah, it's fundamentally dishonest and it's intellectually dishonest, I guess is what I would say. I agree. Financial sovereignty and like monetary, like the ability to store value over the long term in a secure asset has never been possible before. No one's ever had this ability to do that, right? People have purchased property or stocks or whatever, but these are all things that can be confiscated from you. And so the idea that this was meant to be a payment system um, is the system has a payment component to it. It has a transaction system, but there's a number of flaws with that, and it doesn't scale as a payment system for many reasons. It's not even logical. I started watching a video with Roger the other day where he was saying that Bitcoin Cash is faster than Lightning Network, and he omitted a lot of facts, which are that zero confirmation transactions are not secure. They've never been secure. To suggest they're secure is honestly that is reckless. Like that's a very dangerous thing to tell people, that they should accept zero confirmation transactions. It's
Oh no,
already possible.
Lightning is reckless. Sorry, Lightning,
Yeah.
the reckless one.
Well, Lightning is reckless. Yeah, I mean, Lightning is the no. Well, it's the right way to be reckless, right? The zero confirmation transactions on an altcoin are particularly dangerous. It's already dangerous. You already shouldn't be doing that with Bitcoin, but altcoins are even more dangerous. You have problems with blockchain reorganization, which does happen normally. It's a normal part of the protocol. Is the block can reorg if two miners discover a block at the same time. They will propagate those blocks, and then the tiebreaker essentially would become the next block that is built on top of that. Whichever one is built first, that becomes the chain. So chain reorgs are a natural component of Bitcoin, in which case all the transactions in the other block would need to be included in the other one. Um, there's that, which is why they push for transaction serialization on Bitcoin Cash. So they've tried to make it so it's more like you can use the network for zero conf in a way, but it's fundamentally insecure. And in the long term, if the network doesn't have enough transaction fees, then Bitcoin, none of those networks will be secure. They will have to use inflation. So and I think they will. I think that Bitcoin Cash and those altcoins, I think they will end up just having to change their consensus algorithm because they will eventually get attacked. And as the block um, subsidy continues to have, we will see that the hash rate will have on those altcoins. So a lot of people think like, oh, this is really bullish that Litecoin is going to have a halving this year. And I'm like, well, actually, that's terrible news for Litecoin because their hash rate is going to get cut in half, and they don't have any fees, and they will never have fees to support that network.
Yeah, I guess this is the kind of conversation that we're not really having usually. And even in the case of Bitcoin, people think of 2020 and the moment when the rewards for miners get split as that moment when we should be expecting the price to rise. And they base this kind of argumentation on the fact that in the past we have seen similar phenomena. But now I guess the outlook and the way the market looks in the case of Bitcoin has changed significantly. And as we see big financial actors from, I guess, the old system get into Bitcoin, we are going to see how the dynamics change and maybe the volatility lowers, and we're not going to see these crazy increases overnight. Though I can I can state at this point that the market looks like it's very controlled and manipulated by whales, and there is some kind of consensus in terms of dumping or creating a quick pump. And I guess the events of last week were somewhat conclusive in this direction, that you should not count too much on individual actors, and it gives you that sense of seeing a coordinated phenomenon when you see how about $500 of value, which quantifies in quite some $1 billion, get lost from the market cap in a matter of 1 hour. Or maybe we have bots.
Yeah, well, you have both, and all. Yeah, I think with Bitcoin, and your interview with John Carvalho was great because he talked about slippage and market liquidity, and this is something that is very obvious to people who have traded cryptocurrencies. But if it makes sense for all the liquidity to flow into one coin because the liquidity is the most important factor. If you own, a ton of coins in some altcoin network, but there's no liquidity, you simply cannot sell them. They are not worth anything. You can sell up to a certain amount on that exchange before you have exhausted the liquidity and the buy support. And it's actually counterintuitive. Sometimes these altcoins look better when they're only on one exchange because it's very easy to manipulate one exchange or two exchanges. But actually, once you get these altcoins on more exchanges, the liquidity starts getting sucked out quicker. I think Ripple XRP is an example of that. It was added to Coinbase, and everybody probably on that in that XRP standard community probably thought, oh, if we get on Coinbase, we're going to go to the moon. Well, no, you get on Coinbase and you just created a new market that can be manipulated where people can now go and dump their coins. And further, now you've spread that buy support across another exchange. So, these altcoins, they are definitely playing a dangerous game. They all compete with each other. I think it's funny that all of them essentially are an attack on Bitcoin, which is hilarious because if they were in Bitcoin's place, they would be getting attacked equally, and they would lose. They have a lot to lose by attacking Bitcoin. Bitcoin is the most important project in the space. There doesn't make any sense to switch to something else. If that was the case, then there would be no reason to be in this space in the first place. If tomorrow, if I have to move my money every week into a new cryptocurrency, because that's where the market liquidity is gone, I don't have time for that, and I'm not going to do that. So, and I don't think anybody in the world would ever consider that a reasonable, secure system.
I usually regard Bitcoin as a whole different animal, which is different from everything else on the market. All the forks, all the altcoins serve more of a commercial purpose, or they try to solve some kind of problem or implement some kind of technological protocol, which may be useful at some point in the future to be implemented in a Bitcoin sidechain. But in terms of decentralization and in terms of the kind of trust that it gives you, and in terms of storing value, Bitcoin is unprecedented, and it's important to maintain its qualities. Whereas we speak of Bitcoin Cash and Litecoin, all they're trying to do is gain that kind of merchant adoption and become something liquid that you can trade instantly and turn into a replacement that is more decentralized than PayPal, but not quite Bitcoin. So in this regard, I don't think they are competing. But in terms of investing, I guess the newbies who open a Coinbase account, they're going to get on Coinbase and see XRP right now. And they're going
Mm-hmm.
to say, oh my God, this is so cheap. This is like Bitcoin in 2010 or something. It's
Right.
less than $1. I can buy like 500 of those with my savings from last week. and
Right.
I'm going to hold on to these for maybe a few years. But they don't know that Ripple, the company, owns about 60% or more of the supply, and they're going to inflate the supply and the price naturally lowers. And unless they gain traction in terms of finances, financial institutions and banks, nothing significant is going to happen. I'm
Yeah.
skeptical right now that we're going to see the kind of rally that we saw in late 2017 and early 2018 when Ripple went to $3 and there was all that craze and nobody knew when it was going to stop. But it was obvious that at some point
Mhm.
they would stop. But it was just insane. And I lost a lot of money at the time when I
Mm.
shorted Ripple at 50 cents. And I said,
Mhm.
there is no way for this to go higher than this. And it did. And I got wrecked.
Well, and they're because it's actually very easy to manipulate markets when there's not a lot of liquidity, which is a problem with altcoins. So when there's not liquidity, when when there's very little sell pressure, and all it takes is one whale with a lot of money to come in, and they can pump that price up, and they do. This has been happening for years. Anyone who was in the altcoin space in 2013, 2014 knows that these groups existed. They have IRC channels, they have Telegram channels, they all work together. They all go to these exchanges. They put their buys in. They start buying at the same time, and they all pull their buys at the same time. It's a very dangerous game you're playing because the people that you're supposedly coordinating with are also your enemies in this type of system. So yeah, people don't know. You like you said, they just open an account on Coinbase. They think this is an investment. They don't realize that what they're actually doing is they're buying a hash on a network that actually doesn't have any utility in the real world. And there's an infinite number of hashes that can be generated in these projects. There's no limit to the amount of altcoins that can be created. There's an unlimited number of altcoins that can be created. So today might be this. Tomorrow it will be something else. I guarantee you, there will be more altcoins launched tomorrow and the next day.
Also, I think what sets Bitcoin apart from the rest of the crowd is this whole concept of an immaculate conception and the bounty that Satoshi has given us in terms of the 1 million Bitcoins. As long as they are still there and no amount has moved, then we know that the system works and nobody was able to hack the SHA-256
Mm-hmm.
encryption. And that's what I like to think about it. It was like this demonstration that if somebody at some point in the future hacks that, then it's the sign that we should move on and maybe change the algorithm or something. But as long as Satoshi's coins are still there,
Mm-hmm.
and it's like this huge, what do you call it, a piggy bank or a honeypot, something
Yeah,
for hackers to actually try to get into and break. Then
that's not necessarily a bad thing. I think that if someone is going to can break SHA-256, yeah, I mean, I don't know if that's what they're going to use it for, to go steal those coins. I don't know if that will benefit them much, but you're right. It does provide a potential bounty for that. But yeah, I mean, I follow. Adam Back has talked a lot about this. It's not. It's. Uh, I think we will know, and Andreas Antonopoulos has also talked a lot about this. But it's very likely we will know in advance. If SHA-256 is broken, you really have one shot to use it before everyone knows it's broken. So the question is where to use it, because if you use it there, that means that you've just not only broken Bitcoin, you've actually broken every secure system in the planet, pretty much. That's a huge problem for not just Bitcoin. That breaks every financial transaction system right now, encrypted messaging systems. All of our computer systems that are run everything we do in the world. So yeah, those are that's probably a benefit to have that bounty in a way. Perhaps that would be the best place to use that to show that off.
let's switch the topic a little and talk about the Bitcoin meetups that you have in your city. What are they
Sure.
like? Do you usually find newbies who come around and are curious to find out about Bitcoin? Or
So
is
I've
it
actually
usually the same people?
Yeah, recently, I've sort of gotten back into the meetup scene recently. We had a dinner last week with 14 of us locals, and I haven't actually interacted with a lot of the local meetup. I'm starting to get back into them. I have found that they change a lot depending on the time of the year, the time of the market. So if you're in a bull market, the people coming to these are definitely people who want to get rich quick. They see they see a lot of value. They see these altcoins rising. A lot of them, they come in there and they're very confused about blockchain technology. They have good intent. Some of them have good intentions. Like they really they oftentimes understand the problems with our banking system. They see the corrupt financial system, but I think that they have been oftentimes they're just confused by the altcoins and the space in general. They don't quite understand like what the technology is really solving, what the problem is actually solving, that Bitcoin solves. Um, so during the bear market, you definitely get a lot more builders. You get a lot more people who are more savvy, and I think that also over time these groups strengthen. So the people that really the people that continue to go to them, they become more educated. They help educate newcomers. I went to a couple meetups during the height of the bull market, and I'll be honest, it was almost terrifying how many people were there that had no idea how any of this worked, and they were all talking about investing their money. And I was sort of, it was actually sort of like just like it kind of gave me a panic attack because I really couldn't believe that all these people were coming into the space that quickly and that they were willing to put their money into this. You really need to understand this technology and you need to understand what Bitcoin is before you go putting your money into it and investing in it. It's also a terrible idea to tell people to invest in Bitcoin or cryptocurrencies. It's a great way to ruin friendships, or it's a great way to just put your reputation at risk. So my experience with people is I like to talk to them about Bitcoin theory, show them how wallets work, explain to them the technical, intricacies, answer questions, but I definitely try not to encourage people to invest in these things.
Yeah, it's always delicate when friends and family talk to you over dinner and say, I saw this article about Bitcoin and whatever mainstream media publication, and they comment on what they read. And sometimes I just like to listen to them and see how far they can go or how much they actually understand from it. Most of the times they're going to not listen to me and pretend that I'm brainwashed or something, and there is no way for me to actually understand what the real world actually uses in terms of mean of exchange. And they point out to me like real paper money and say this is real, what you're using is not. But when I explain to them the idea that it's money that cannot be confiscated and Bitcoin is not this digital currency as it's presented, it's actually a cryptographic invention which became digital just because it had to. And it fulfills an ideal which existed before the internet. But we have it right now just because we are able to have it in a way that the governments cannot confiscate. Otherwise, I guess it'd be this kind of hidden and very well concealed non-governmental money that we would be trading between us.
Yeah, that's exactly right. The most important, I think, to understanding Bitcoin, which is how I got into Bitcoin, was my fascination with monetary economics. I studied basically studied Latin American studies, but I study a lot of situations where these governments in these countries where they didn't they collapsed because they didn't have essentially a financial system that they could control. The money was corrupted in these countries, and so understanding economics and especially central banking is a very important thing to understanding Bitcoin. Understanding digital scarcity. Adam Back likes to refer to it as a digital bear asset, which is exactly what it is. And it's not a digital bear asset if you can't run a node. If you have to rely on somebody else to read the blockchain, you don't actually bear that asset. You have a key to a potential asset, that might exist if you have if someone has a copy of that chain somewhere. But Bitcoin is definitely has that digital scarcity, and it's the only cryptocurrency that has that digital scarcity in the long term that I foresee being possible. And I think this is why people have been confused about Bitcoin, because it has been presented as a payments solution, and this is totally incorrect. And it took a lot of people. It took me a long time to understand that as well. Payments are not really a problem, right? Like it's not. There's many ways to make payments. You can make payments using many different systems, and the vast majority of people don't have any problems making payments. They have problems with storing money and saving money in a secure way. There's people who can't even get bank accounts. They don't. What are they don't, and they don't have a secure physical location. They cannot store cash or gold or something in a physical location. It's insecure to do that. They also can't get access to a banking system. In this situation, Bitcoin is your only way to store value. You don't want to be using that for your payments. In that case, you want to be storing your value. Payments can be done in a number of ways. You can pay someone in cash, credit cards. There's a million now different payment applications that you can download on your phone. There's in Africa, even there's entire payment networks that are go over, cell phones that don't require even a smartphone or application. So payments, making payments is for things like for your daily sustenance are typically not a problem for people at all. So, that's why Lightning really does solve that problem. Chances are today, if you're going to make a payment somewhere with a credit card, you can't make that payment if the merchant's not online anyways. So it's not a problem to be online for Lightning. That's not an issue. People are online all the time now. If my credit card didn't work, then I would pay with cash. You know, so as far as cash goes, that is another problem that we will see. I think that's going to become more of a problem. But these are the things that need to be talked about with someone before in order for them to understand Bitcoin and why it has value.
I actually wrote an article about this and tried to explain that Bitcoin is not this culmination of the cashless society that we hear about all the time. And this concept of having a society without cash is the invention of banks, which try to gain more control and find out more about our financial behavior. And I guess it's mutually convenient in relation to governments that get more control and get to implement their anti-money laundering policies more effectively.
Yeah, I think that Bitcoin makes a lot of sense for moving value at large quantities across borders. It makes a lot of sense for many applications, but on-chain payments don't make sense for a lot of reasons. The biggest one, just real quick, going back to the scaling issue, is that when you make a payment using Bitcoin on-chain, you're not paying the fee based upon the value you're moving. You're paying a fee based on the size of data. So if you are making a small payment on the Bitcoin network and you have a lot of inputs, it's going to require more data. It's going to be a larger payment size, and therefore your fee will go up. So using a blockchain for micropayments is actually very stupid. It doesn't make any sense to use a blockchain for micropayments. I consider micropayments to be like anything less than $20. I know a lot of people argue me that, but basically just day-to-day payments, $20 or less, or even $50 or less, $100 or less. These are the perfect use case for something like Lightning, because the fees are based on the payment quantity, like the size of the amount, rather than the size of data. So this is just another fundamental problem with that whole big block side is that. But anyways, I didn't mean to digress too much, but yeah, payments are a whole different thing, and there's many ways to deal with payments. However, it's not worth sacrificing the monetary sovereignty of Bitcoin so we can make faster payments when we already have ways to do that.
Yeah, and we have all these nice applications like, I'm not sure if you heard of M-Pesa, and
Yes, that's the one I meant that's used in Africa is M-Pesa. Yeah.
also in China they have something which is made by AliExpress. I'm not sure what it's called, WeChat or WePay. something
Mhm.
like that. And it's very fast. It's surprisingly efficient in terms of sending money from point A to point B.
Yeah, it's perfectly fine for buying groceries and buying coffee and doing things like that. If you were trying to protect your wealth from the government and you needed to escape from the government and move your money across borders, that might be a case where Bitcoin is extremely valuable. But generally speaking, you know, yeah, the payments for little daily payments and stuff is not a problem that's the Bitcoin solves.
I agree with that. And maybe that we should present Bitcoin in a way that does justice to what Bitcoin actually is and stop trying to pretend that it's a great mean of payment. I guess that
Mhm.
was the narrative that was useful until 2014 or something. And
Right, exactly.
I guess the narrative that most people get introduced to in terms of Bitcoin is the one that they can find on Netflix. And if you look on Netflix right now and type in Bitcoin, you're going to find that documentary, which is called Banking on Bitcoin, I think. And it stars Roger Ver and Derek Voorhees and Charlie Shrem,
Mhm.
and it's about their story and how they got into Bitcoin. And it's inspiring. I'm not saying it's bad, even though they didn't turn out to be the most useful actors in the space or the most honest. They present Bitcoin in a favorable way and they get you excited about what it can do.
Mhm.
But the narrative revolving around this invention is dated in the sense that they talk about banking the unbanked
Mhm.
and having a Swiss bank in your pocket and all these catchphrases which were useful at the time to spread adoption, but
Mhm.
proved to be used less in terms of scaling, as there is no way for this blockchain to scale to actually provide that kind of magnitude for payments.
It's also just intellectually wrong to like to if you have two versions of money, if you have a hard money and you have a dirty like a non easy money like fiat, when you're going to come time to actually make a payment, why would you want to use the money that is really really valuable when you have this other money that you can use before you use that? So and it's also incredibly difficult to get paid in Bitcoin. It's incredibly difficult to even buy Bitcoin or get it. So once you get your hands on it, you're telling me that you want to turn around and then get rid of it, all so that you could make some payments. So the economics don't actually make sense. There's an infinite amount of altcoins. There's an infinite amount of fiat money. There is a scarce, limited amount of Bitcoin. And we have seen over and over, and Saifedean Ammous talks about this quite a bit. Bitcoin is really for the low time preference, for people that have a low time preference, that are looking to store value long term in a secure way outside of the banking system. That is a legitimate use case. So as far as banking on Bitcoin goes, yeah, if you don't trust central banks and you don't and you want to store money outside of a system, but you don't want to hold cash, you don't want to hold gold, you don't have any other option except for Bitcoin in my book. Bitcoin is perfect as a store of value in that sense. It is fine to use it as a medium exchange. It's just that it doesn't make sense to use that as a medium exchange for daily payments for tiny little things when there's many, many ways that can be done. And I think at this point, with Lightning, the Lightning Network, it's growing so quickly that every single narrative that is put up against it will eventually just be run over because the developers can iterate on Lightning incredibly fast compared to Bitcoin. It's an incredibly powerful protocol, and they will continue to put up all sorts of arguments against Lightning. But they have to remember Lightning is just very early beta. So if they think it's anything what it's going to be a year from now, they're incredibly incorrect. What Lightning will be a year from now will be a lot more powerful than what it is today.
So tell me about an article that you wrote on Medium or your website and
Mhm.
what it's all about and what you're arguing for.
So I've written a few articles. I wrote one about altcoins, and I wrote that article. Not I specifically talk a lot about Litecoin and Charlie Lee in that article, but I don't mean to disparage him so much as point out that you can be a scammer in this space and not even really know you're a scammer or accept that you've said things in the past that are completely absurd, like the idea that Litecoin is a light version of Bitcoin. That doesn't make any sense. That's technically incorrect. It's, in all ways. Um, you can say things like Litecoin is the silver to Bitcoin's gold, and that's also really stupid and absurd. It has not the case. Silver has a very different history as money than gold, and the idea that the only realistic notion that makes sense for that is that silver is easier to divide. It was easier to obtain, so it was a little bit you could transact in smaller amounts. This entire narrative doesn't make sense with Bitcoin because Bitcoin can be broken down into one Satoshi. It's very hard with a gold coin to cut a gold coin in half or into small bits. Eventually, it's so small you can't. How do you transact with a tiny piece of gold? That's not a problem with Bitcoin. And especially now with the Lightning Network, you can transact quantities down to one Satoshi between parties. And then in your channel, you can actually transact even smaller than a Satoshi, a millisatoshi. So those are, I go into the article a bit about security and a bit about these topics, but people generally they just make up narratives that fit what they're trying to sell you. I don't think Charlie Lee was a bad guy. It's very obvious that it's a centralized project that doesn't have a really valid reason to exist. And so to keep pushing it as like a legitimate solution to something is absurd. Because if Litecoin was a legitimate altcoin, then they're all legitimate. And in that case, we can throw this whole project away because there will never be a secure store of value if we say that any one of these altcoins is practical for that purpose. So it's dangerous, and the truth is that, people are often, they're just pumping what they have in their bag. They're holding a bunch of Litecoin or they're holding a bunch of Ripple, and of course they're going to go shill it because they're trying to get more Bitcoin. At the end of the day, everyone wants to get more Bitcoin, and the easiest way to do that is to go mine some altcoins or buy some altcoins and try to pump them, rather than just going out and getting a job and doing hard work, or finding a way to earn money by putting content on the internet and accepting tips and payments. Again, I think that Lightning Network is really fascinating because it's allowing people to monetize much smaller amounts of money very quickly and easily with almost no fees. So I think we're seeing those narratives sort of fall apart. Now, the other article that I wrote one about the block size, the recent block size controversy with Luke-JR, which I basically explained that one of the problems with the big blocks is that it takes blocks in general, is that it takes a long time to synchronize a node from scratch, as you'll see when you're syncing your node. It takes time, and you need hardware you need CPU power in order to validate those blocks yourself. You need bandwidth to do the initial synchronization as well as keep in sync. So I'm very sympathetic to the smaller block discussion with Luke-JR. However, the point I make in that article is that there's no data to back up his claims, and I don't think and the data that he did present to me was actually very laughable. It would clearly show that the node count is far more influenced by the bull market and bear market than it is by currently changing the size. So I think that debate needs to just go to rest for now, and we have more important things to work on. And then the other article I've written recently was just a guide explaining to users how to use the Lightning Network on an Android mobile phone by using their Samurai wallet in combination with the Bitcoin Lightning wallet. We are going to see many, many more Bitcoin Lightning wallets that have a wonderful user experience. It's going to take a while longer because there's coding needs to be done, but those wallets will start hitting the market this year. And if you want to experience a really good Bitcoin Lightning wallet with a futuristic experience, the Bitcoin Lightning wallet by Anton, I think his last name is Kumaragodsky. I'm not sure how to pronounce. I think he's from Russia or Russian background. But he's done a phenomenal job with that wallet. And I think it's an example of Lightning wallets that will be built in the future.
What is the name of the wallet? The
It's
one that I
literally called,
think about right now is Jewel, but I'm not sure if it's the
yeah.
same that you think about.
So Jewel is an extension for Chrome. The wallet I'm referring to is literally called Bitcoin Lightning Wallet. And if you just go to lightning-wallet.com, it goes to his website. And he offers a number of services as well, such as channel backups through his wallet. And so he hosts some servers, and the way he does backups is basically it encrypts the data, and then he stores an encrypted payload um, on his server. So that is right now with channel backups. There's no Lightning. The Lightning protocol does not have a standardized way of doing channel backups. So he actually came with his own solution. It's actually his own Lightning node that he coded, and he coded his own channel backup solution right now. And also a watchtower service that he runs, which basically it's actually a really, really novel way that he implemented this. But essentially, when you first start the wallet, you basically pay 1,000 satoshis for a bunch of these tokens, and these tokens get used for basically making these basically um, paying for these services. They are opt-in, but they're incredibly cheap. So it's really the type of service in the future, I think, where you might run a wallet and you could use your friends, or you could use other people running nodes, or you could pay for a watchtower service from somebody who basically just watches your channels while you're offline. Um, and you can also run a watchtower yourself. So if you have a home node, your home node can be your watchtower. And then when you're out and about and mobile, you can, your mobile phone, you don't have to worry about your mobile phone, like losing access to data for a week. Yeah. So, and these are just beginning. We are seeing a whole new revolution in user sovereignty, privacy, because the only way to use Bitcoin in a private, secure manner is by running your own node. Um, that's just a matter of fact.
Yeah, sorry, I had to respond to a message by my boss. But anyway, I was thinking right now of what you said about your opinions on Litecoin, and the second one was about, wait,
The blocks, the
yeah,
IBD. Yeah.
decreasing the block size.
Right.
I think in 2017, coins like Litecoin were very useful because they were on a lot of exchanges, and they were like the gateway to buying shit coins on Binance and stuff like that. So when Bitcoin was very clogged and the blockchain was busy and you had to pay high fees, people would buy Litecoin and try to bypass that. And when Litecoin got busy and the fees rose, they even got into Dogecoin. So
Mhm.
in the middle of this trading fever, I guess coins that have been in the market for a long time can be useful. And
Mhm.
it's actually interesting, but bad that exchanges haven't implemented any way to use Lightning yet. So
Mhm.
there is no way to buy from them Bitcoin on the Lightning network. They still use the main blockchain. And I think I heard something from Adam back when Blockstream has launched, what's their sidechain called?
Liquid.
Liquid. When they launched Liquid, they mentioned that more than 60% of daily transaction volume takes place between different exchanges. And we haven't done much in terms of making sure that we don't occupy that much of the block space with these otherwise redundant exchanges that can be done in better ways. And by exchanges, I mean trades.
Yeah, absolutely. Exchange related transactions probably account for even more in total if you consider all the people sending and withdrawing from exchanges that are trying to perform arbitrage. So Liquid is a great resource for moving large amounts of cryptocurrency. That's one of the problems with altcoins, right? So it's fine if you're speculating small amounts of money, but if you move, let's say you need to move a lot of Litecoin to an exchange. And then you need to sell that Litecoin for Bitcoin, and then you need to buy the other coin you want to gamble on. You now have to pay fees, and you have a problem with what's called slippage or liquidity or market spreads, where when you go to sell that altcoin, you're essentially losing money because because you're losing money on the exchange between turning Litecoin into Bitcoin, so you can then go to the Bitcoin market and buy whatever else you want to buy. Now, the hope would be that, oh, I don't need to convert to Bitcoin. I can just use Litecoin. But then that's true for every altcoin. So then the problem becomes you now have an infinite number of altcoins, and now you need liquidity supported on all of them in order to actually use any of them. And this can keep going on forever. And eventually there will just be no liquidity for any of those altcoins because they all compete with each other. This probably made sense for a short period of time. And yeah, I think speculators will use Litecoin. I've heard this a lot. People transfer money to using exchanges in Litecoin, and a lot of them would be like, well, the fees are high on Bitcoin. It's like, okay, well, I guess if you're gambling a small amount of money, yeah, that might be the case. So if you're doing like $50 or less or $100 or less, it's probably fine to use an altcoin. But this is not going to work for somebody that's trading large quantities of money. If they're trading $50,000 or $100,000, they're going to use Bitcoin. Secondly, exchanges don't accept they typically do not accept withdrawals, or they don't credit withdrawals until there's been a number of confirmations. So you can use an altcoin like Litecoin, but you have to wait for more confirmations because exchanges require more confirmations for altcoins because they are less secure. It's possible that the exchange can be attacked, or they could lose money if the blockchain reorged, which can happen. And so this is so that doesn't save you time. It potentially could save you money on very, very small trades. But even then, you have to ask the question, is it actually worth, is it even, if you're moving a large amount of money, it's far cheaper just to use Bitcoin and pay the higher fee than it is to use altcoin and then lose money on the slippage. This is a fact that I think every long-time trader knows. And the nice thing about the Liquid network is that the Liquid network is using Bitcoin liquidity, so you don't have this problem at all with Liquid. You can move money back and forth between exchanges, and because Liquid Bitcoin is Bitcoin, it is an actual representation of real Bitcoin locked in a smart contract. That this Liquid Bitcoin is Bitcoin and it holds that same exact value. Therefore, it absorbs all that market liquidity that Bitcoin already has. That's going to take a little while to roll out. It's not an overnight thing. It will take time. There's a number of advantages to Liquid for exchanges. Now, Lightning Network is another thing that can be perfectly used for bootstrapping Bitcoin's liquidity between exchanges. Will be able to open up Lightning channels, but also users will open up Lightning channels with exchanges. It will just take a matter of time before this happens. I have already mentioned a number of exchanges are definitely exploring this already. We've already seen zigzag.io, which is run by the Bitlumio team, bitloom.io. But yeah, zigzag.io already allows you to deposit, to pay to basically use Lightning Network and receive altcoins or vice versa. It's only a matter of time until this becomes ubiquitous everywhere. This also will help a lot with mining pools. And I know that Slush Pool, for example, does. I interacted with some of their people on Twitter, and they suggested that they are definitely interested in adding Lightning Network as a way to receive mining pool payouts, which is a really great option because a lot of people who are mining small amounts of Bitcoin, they have to wait until their account hits a certain threshold before they withdraw, because the exchange has to pay a fee for that withdrawal fee. If you can start doing mining pool payouts off chain, that is significantly better for the exchange. They will save a lot of money, and users will save a lot of money, and they'll also be able to mine incredibly small amounts of Bitcoin. They'll be able to just mine a few Satoshis if they want.
Yeah, but my point is that I don't think we are ready for another bull run of the same magnitude, and we are going to stumble upon the same old issues with the fees. And even though we have better infrastructure, it's going to reach its limits at some point. So if we were to go back to $20,000 for Bitcoin tomorrow, I think we would end up with the same kind of issues, and that's unfortunate. I guess we should wait a little before we promote the next wave. you know?
Yeah, I don't see a hurry in promoting Bitcoin. To be honest with you, it's a long-term project. Yeah, I guess that this is always going to be something that it's going to confuse newcomers into the space, because a lot of them are going to be like, I thought Bitcoin was here for the cheap fees. That's why they think Bitcoin exists. It's it's kind of a paradox, because on the other hand, it's like it's one of the restaurant's so crowded that no one ever goes there. The there's a there's actually the fact that Bitcoin even can produce enough fees to actually pay a significant amount in the reward is pretty promising. There's no other altcoin that can do that, that has done that. Bitcoin is the only proof of work network that has ever produced a measurable amount of fees to pay for security. So that's my opinion about that is that yeah, Lightning Network is going to take a little while longer. There's a number of features coming out that are going to make this a lot easier for users to pay each other directly. Just being able to pay you without having to create a payment request, that will be a feature in the future. However, right now you do have to generate payment requests to receive payments. But there's already in development a feature where I could just pay your node directly. I could push a payment directly to your node without you actually having a payment request. And then exchanges will be able to use this functionality by giving a user a tag. So the user could push a payment to an exchange with their user ID for that exchange, and that exchange could credit that account based on that user ID. There's a number of ways that exchanges will implement Lightning. And yeah, I agree. There's no hurry. And also, I just think from a market size perspective, you going back to earlier point about the halvening. I don't like to look at the historical chart and try to compare it to other things and say that, well, the halvening is what caused the price to go really high. I don't think that we can look at the past and say that that's going to necessarily happen in the future. It may have an impact, but the price could. I've looked at the charts, and I don't know why the last bull market had two peaks. Why does this last, like, not the last bull market, but the previous bull market, 2013, 2014, had two big, large peaks, and the last one only had one. So if we're going to compare past data, why wouldn't we have two in this next bull market? I mean, there's a lot of things that you can't explain if you try to look at the past and say it's going to happen in the future. I don't think the halvening will actually have much of an effect on the price at all. It'll create some hype, but I just don't buy that necessarily.
Generally, I think I'm very agnostic in relation to technical analysis and regard it as some kind of astronomy. No, astrology. Wait,
Astrology,
astrology, not
yeah.
astronomy. You just look at the stars and try to see patterns, and then look at the weather, or maybe telling the weather. Sometimes you see clouds and you think, and maybe that in our metaphor, the clouds are the trading volume. So you see the clouds gathering and you say it's going to rain, but sometimes it doesn't work like that. There are forces at play that make your predictions unsustainable and unrealistic. And at the end of the day, it's also, I have a background in political science, and I know how surveys are done and how they determine, pretty scientifically actually, with sociology they have gone very far in terms of determining how people are going to vote according to different methodologies, but it doesn't work out because they cannot predict the behavior that people are going to be having in that specific day. And even one small event like a storm outside, the weather can determine people that don't go out to vote, and that's going to ruin their expectations. It can also happen in the case of markets with events that cannot be foreseen and happen spontaneously, and then break all expectations and create something that
Hmm.
nobody else was able to foresee unless they got lucky.
Yeah.
But I guess at the end of this interview, we can both agree on something. And I know that you are critical of altcoins, but I think intellectually speaking, they can be interesting scientific experiments, and we get to see what happens in that specific case. So they're not necessarily good investments or good stores of value, but it's useful to see what happens to them if they pursue a certain path so that we know how to protect Bitcoin. They give us this kind of informal education, which tells us which path we should never take in order to retain these qualities that we appreciate in Bitcoin right now.
Yeah, I think that's a very fair way to say that. And they're like an escape valve for people to go experiment without having to do anything on the Bitcoin chain. Where I take issue with altcoins, I don't care if people make altcoins to experiment with them. What I take issue with is people who then try to market them as a solution for something that they're clearly not a solution for. So I definitely see a difference between experimentation versus marketing. And those are, to me, where I draw the line.
Patrick Miller, this was very insightful, and I'm happy that we got to talk about this. I know that we interacted on Twitter and we had a few exchanges, but this was useful to actually talk. So thank you very much for doing this Crypto Insider interview, and I hope that in the future, if you ever do anything interesting in the space or you have some kind of new idea or discovery that you write about, we can talk and do another interview.
That sounds great. Thanks so much for having me, Vlad.
Thank you very much. And this will get published soon, so stay tuned.